Welcome to the Sazmining Podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds. Today's guest is an alum of Queen's University, where he received his bachelor's degree from the Smith School of Business. Prior to his current position, he spent some time as a portfolio manager at Limestone Capital and in investment banking with Goldman Sachs. Today, he is the CFO and co-founder of Luxor Technologies, which has built a range of solutions for scaling blockchain infrastructure, including a globally distributed mining pool, a hashrate network switching engine, and a wide variety of blockchain software ranging from blockchain explorers to an ASIC management platform. All that said, I'd like to welcome you, Ethan Vera, to the podcast.
Thanks for having me on the show. Excited to be here and talk mining.
Of course. Well, to kick things off, can you talk about how you went about starting Luxor Tech?
Yeah, it was about 3 years ago now. I was in college and one of my classmates was working on the software project. It was right at kind of the run up of the 2017 price movement. So obviously a lot of hype in the space. I had started to get really interested in Bitcoin at the time and wanted to get involved, and the right opportunity kind of presented itself. So he asked me to come join the team. And then like a month later, we launched our first product. So looking at the space, what we're really excited about Bitcoin was that there's no longer essentially plan fed. Anyone with an ASIC, electricity and internet can take part in that minting process. And that's pretty sweet. So we're like, let's build a product around that. And we built exactly that, which was a mining pool where we take raw computational power, secure and verify transactions on the network and get paid as a result. And so since then, we've just continued to build that out.
Yeah, and mining pools are one of those things that are absolutely essential to the space. You hear miners talking about them, but many times when you talk with someone who's just on the edge of crypto or starting to get involved, they don't understand exactly what a mining pool does or what it entails. Can you just talk about what a mining pool is, and we can start from there?
Yeah, I mean, you're exactly right, though. It's like a huge black box. And even miners who have been in the space for a year still don't really understand what's going on. So I definitely think that's true. Mining pool started in around 2013 by Slush Pool, basically as a way to more quickly and more consistently find blocks. Because if you as an individual miner want to go and mine yourself, you're going to end up taking a longer time to find blocks than if, say, you and I joined forces and we mined together and just split reward based on how much we contributed. So in 2013, basically these pools were formed. Miners would come together and just mine together. And as soon as they find a block, they divvy up the reward based on how much they contributed. Now that model shifted quite a bit, mining pools have shifted to what's called a pay per share method, where instead of paying out on the actual value of what the miners find on the network, they pay out on the expected value. So they really take the luck variant out of mining for people who actually own the ASICs. And so about 95% of the industry operates on that type of method now. And what it really does is it allows you as an ASIC owner and a miner to not have to deal with the variability of mining. And you don't have to look at, the luck factor. You can consistently generate hash rate and get paid reward right away for it. So that's kind of what the mining pool system is today. It's talked about in very many different ways, but at its most basic level, mining pools are buyers of hash rate. They buy hash rate from miners at around 98% of the expected value.
Yeah. And going off of that, starting up a mining pool, you're going to have to go and find many other mining companies to go and join forces with, so you can actually begin to make up a percentage of the total hash power on the network, so you can consistently drive those types of payouts to your miners. How do you go about getting that initial hash power to start up your own mining pool?
That's one of the hardest parts right there. You identified it, because really miners want to join a pool that's already established, that seems to be validated. They typically don't want to join a pool that just started and has no hash rate. So kind of getting that initial hash rate is like the most important part to scaling up a mining pool. I think the biggest things is like involving yourself in the communities. So we started in a lot of altcoins. Our first pool was for Siacoin and Decred, and we just really involved ourselves in the community and made sure that we were helping it out where possible, so that people trusted us as a mining pool operator and would join our pool. Once you've achieved a certain threshold of hash rate, let's call it like a few percentage of the network, then it starts to come in where naturally like you no longer need to do outbound sales. Like inbounds will come in and people will just join your pool because you're listed on a website, or they've heard about you from a friend. So that's kind of like the process. I think since starting the pool in late 2017 to now, the sales strategy has changed a lot. At the beginning, it was very much so a marketing based game where it was like branding, getting your name out there. But as the markets become more institutionalized and there's no longer 80% of the network made up of like small miners, it's very much so sales focused. So establishing relationships with large mining firms and making sure that you're tailoring your offering to offering them a good service. So it's a lot more relationship based than it once was now, especially in Bitcoin.
There are many miners who are listening right now who listen to this podcast, and let's say that they're going out and trying to establish the right relationship with a mining pool. What are the things that they should be talking about in these discussions and paying attention to when they're going and trying to negotiate with a mining pool and find the best deal and best mining pool partner to work with?
What they look for will definitely vary across miners, but from what I've seen, the number one concern always is profitability. Miners are profit driven. It's a capitalist industry, and I think that's what makes proof of work so beautiful. So at the end of the day, you need to go to a mining pool where you can get the most Bitcoin per hash as possible. And so I think just doing the rounds, talking to a very like a select group of mining pools, and making sure you're not just talking to one in that selection process is important. Also, if you have a certain amount of hash rate, you can usually negotiate a special fee. Uh, Mining pools charge a public fee. It usually ranges from like 2.5 to 4% of mining revenue. If you have over let's say like 10 20 petahash, you can start to negotiate those fees down. So if you're at that scale, then definitely start having those conversations with your pool operators. Beyond profit, I think one of the really important parts is like data and statistics. So you as a mining operator, especially if you're based in the US, I mean, you would definitely attest to this too. Like having that like strong data is very important. Knowing exactly how you're getting paid out, when you're getting paid out for how much hash rate, and having that in digestible way. So make sure your platform can offer that. And then I think just like a relationship with a pool operator. It's very much so a services business now, where if you're a large miner and you go to a pool operator, they should be willing to like bend over backwards for you, and they should be willing to go help you if you need help with equipment procurement. You need to find a new hosting site. You need to just talk if, hey, is this miner a good buy? That pool operator should always be available to bounce ideas off of and be a support for you. So finding a relationship like that, I think, is pretty important.
Yeah, definitely. So boiling that down, it really seems like profitability, obviously extremely important. You want to get that percentage cut down as much as possible. If you have that negotiation power from at least starting point 10 petahash, and then you also want to make sure that the mining pool you do decide to work with has those relationships that can help you grow and scale your mine as profitably as possible, helping you procure equipment, helping you find sites and co-locations. I think that is all phenomenal advice.
Yeah, I think as we head into an era of profit switching, like that's definitely going to be, it's gonna hit on that point one, in an extreme way. In today's world, like everyone mines the Bitcoin mining pools, but I think if you look like in 6 to 12 months, it's all going to be profit switching algorithms. And then so like beyond what the fee negotiation we're talking about, now you need to go and look at like historical performance of the profit switching algorithm. It's kind of like a hedge fund where if you want to give money to a hedge fund as a high net worth individual, you're going to ask for their track record. You're going to be like, how much have you beat the S&P 500 every year? The same thing's going to be done with profit switching, where you're going to go to say Luxor or Poolin, and you're going to be like, how much have you beat Bitcoin's base rate, over the past year, or Zcash's base rate, or whatever the base chain is. And so I think that's going to be in the next 6 to 12 months, you're going to start to see that transition, and that's going to be a really important factor to look at.
Yeah, and that's extremely fascinating because this is really what's happening on the next frontier from a mining pool standpoint? I mean, many people, let's say that they're a cryptocurrency miner, they're mining Bitcoin, they have predictions for what's going to happen with the Bitcoin hash rate, with the equipment, long-term macro performance factors within the actual price of Bitcoin. But then you're taking it in even like one layer deeper, where you're talking about from a mining pool perspective, all these different things that mining pools have to do. And you're comparing them essentially to a hedge fund. So is this a switch, going back to what you said, the profit switching and potentially increasing those profits and seeing different performance in mining pools? Is that something that is well known in the industry right now, and that miners that you're talking to are considering when they're speaking to these different mining pools? Or is this something that we're really going to start to see much more of in the future?
Right now, these switching algorithms are pretty rudimentary, but almost every major pool has them. I think as they get more sophisticated, the differentiation between a good switching algorithm and a bad switching algorithm will really start to stand out. So I think we're at the cusp of it, but it hasn't taken a hold yet. I think it'll be another 6 months before every, let's say 90% of miners are on it. There'll be like the tribalistic miners who just want to mine Bitcoin and they don't want to touch other coins or even have their hash rate mine other coins. But I think 90% of miners definitely are profit driven. So that's going to be probably the way the industry heads forward. And historically, this will change also the revenue model. So historically, mining pools have taken like a base fee. We'll take 2% of mining revenue. And I think as we head into like an era of profit switching, you'll start to see that transition to more of a hedge fund model where they say, maybe we'll take 20 basis points, but we'll take 20% of the uplift. And it'll be more of a performance based fee than purely like just for, operating a service. So I'm excited to see how this, the pool space transforms definitely.
Yeah, that's fascinating, because I know that some of the people that we've had conversations with, they're looking at these different types of structures where some might say, okay, we're going to take a base percentage. Others are saying, well, we can beat the traditional return by this much, so we want 50% of the excess. And then that was really fascinating to say, you think it might even take a sort of structure similar to what a hedge fund is doing, like certain number of basis points and then some sort of performance fee. So that's really interesting from that perspective, to hear that mining pools are thinking that the industry might be moving in this type of way. You guys are also working on things outside of just your mining pool. Can you elaborate a little bit on some of those other products that you guys are working on?
Yeah, so well, profit switching is one of them. And the last thing I'll say there too, because I know we've gone deep down the rabbit hole here, but it may actually make sense that you want to join a smaller pool than a bigger pool. And the reason is much like a hedge fund, like if you're too big, you're not nimble enough. You can't take advantage of high like chances of like arbitrage or, just inefficiencies in the market. Similarly, if you're jumping between like SHA-256 chains, you may not want that much hash rate on your pool because you want to take advantage of a time that Digibyte is 10% more profitable to mine than Bitcoin. So it may actually be that miners are looking for more nimble pools rather than just like the largest pool like they do today. Um,
That's a great
sorry,
point.
you're gonna have to cut me off on this profit switching. I could talk about it all day here.
Well, actually, while we're on it, because it seems like out of all people I've personally talked to, it seems like you really are deep in this area. You understand the profit switching. You have predictions for what's happening in the future. Are there any, I guess, core beliefs that you have about mining pools, either where they're going or the way that people are approaching this profit switching, that you hold to be true, but most people might not even be aware of?
I think we're one of the only people that are actually pushing the fact that miners generate hash rate and not Bitcoin. Like at the end of the day, if you have a Bitmain S19, what it's doing is it's running through the SHA-256 algorithm and running through that hash function. So we take the stance that these machines are producing hash rate, and when you start to like take a step back and look at it at that angle, you can get more creative on how you build traditional marketplaces for it and also financial derivatives. So you can start to think that, okay, hash rate itself has a value. Right now it's worth like about 10.1 cents a terahash per day, and you can start to build like interesting financial instruments based on the value of hash rate itself. So I'm looking forward to the industry seeing it more in that light. And I think we're going to start to create way better products when we start actually moving in that direction.
Yeah. And when you're going and developing the best model to allocate hash, I mean, of course, there are the huge upsides, right? Of you outperforming how that hash would have been directed towards the Bitcoin, the SHA-256 algorithm. But what are the risks that a miner might be associating with if they decide to go down that profit switching approach? And then let's say the coin or the protocol that's being mined isn't doing as well or performing as well as Bitcoin. How do you balance those two risks when you're trying to direct the hash in the most profitable way possible?
So there's some profit switching algorithms out there that will pay a miner out in multiple coins. So I think maybe Antpool is an example of this, where they mine Bitcoin and BCH, and you need both a Bitcoin Cash and a Bitcoin wallet. And then obviously you as a miner are now exposed to the price of Bitcoin Cash. And I would say probably a lot of people that are listening to this podcast aren't the biggest fans of Bitcoin Cash and don't want to hold on to it, or maybe some are. But that's definitely a risk that you need to take into consideration. But I think the more sophisticated profit switching algorithms are all priced in Bitcoin and only pay out in Bitcoin. So our Equihash profit switching algorithm jumps between Zcash, Horizon, Pirate, and Komodo. Some of those you probably have never even heard of. But we decide which is the most profitable to mine on a Bitcoin basis. So considering in market liquidity, potential slippage, and then we pay out in Bitcoin so that they don't have to handle, some random shitcoin. They can just get paid right away in Bitcoin. And so really there's no long-term risk to this type of strategy. If Pirate Chain goes to zero, which it may, it'll just be the case that we don't mine it anymore. We mine on 5-minute intervals, so we're only exposed to like a 5-minute interval price movement. So I think at its base, like if you structure the profit switching algorithm correctly, you'll never be worse off. So like for the SHA-256 example, at its base, you'll always be mining Bitcoin and you'll get paid what you are now. But at best, you'll exposed to these times where another blockchain's paying a little bit more and you're exposed to that uplift. So I think in the future, like there's going to be no downside of doing profit switching from a financial perspective.
Got it. And so there's really, if I heard you correctly, only a 5-minute window where you're really being exposed to that other coin before it gets transitioned back into Bitcoin.
Yeah. And actually, like us as the pool operator take that risk. So even the miners on our platform aren't exposed to that. We kind of say, okay, here's the current price, considering the market conditions. We're going to, as a pool operator, take that 5-minute risk. If the price shoots up, we benefit. If the price shoots down, we lose. But, over the long run, we're hoping that we can deal with that variance. Our profit switching algorithm, I think, moves a bit faster than most people's. I think a lot of people like do it every hour or two, but we try and act more nimble and get in and out and, quicker opportunities. The Equihash landscape is very different than SHA-256 algorithm because every single chain adjusts difficulty every block. Whereas, Bitcoin is every 2016 block. So there's not like wide spikes in profitability as we see with a chain like Zcash. And so we've been able to generate like 5-6% uplift in Equihash over the base chain because of, how variable those profitability levels are.
That's fascinating. And you actually answered my next question. I was going to ask you from I would say like a conservative approach, not just averaging it out, but a very conservative approach. What would you say if a miner, rather than just going and mining Bitcoin, decides to go and utilize this type profit switching type of algorithm or approach? What percentage gains do you think that they're going to be seeing versus just mining straight Bitcoin with a normal mining pool?
From what I've seen so far on some of our kind of global competitors like Poolin, via BTC, it's usually in the range of like 1 to 2% at most right now. I think at the upper end, we'll probably see like 3 to 4 in the future. It's definitely not, 5 plus on a ongoing basis, but I think you could get a few extra percentage. And as you know, like mining industry is tough right now. Margins are low. So if you can add like a few percentage points that directly go to your bottom line.
Yeah. Yeah, definitely. I mean, that's just direct additional revenue in the end to your bottom line. So that few percent ends up being a much greater part of the operations profitability.
Yeah, there's no additional cost that comes with generating this extra revenue, right? It's not like firmware where you have to take into consideration that you're now burning up extra electricity by overclocking. Like you get those few percent, no additional cost, they flow straight to your net income.
Yeah. And so if you're taking a miner's point of view, understanding where the mining pools are heading and everything that we just talked about from the profit switching algorithm, what would you recommend miners do today to try and maximize their output, understanding the landscape from a mining pool operator's perspective?
From a revenue standpoint, most miners think that it's like set. It's just based on how many machines you have, but we're starting to see that that's not the case. So profit switching is one example, obviously. So make sure you're monitoring that space, but also things like firmware. So if there are ways that you can uh, install custom firmware on your machine, and that exists for a lot of the SHA-256 machines, definitely explore it and try it out, I'd say. I think historically people have been quite shy around customized firmware because there's concerns if the machine has an issue, you may not be able to get warranty from it. They're also done by like pretty sketchy developers that are hanging out in Telegram chats that you've never met in person, and you don't necessarily want to give them control of your machine. But I think we're starting to head into an era where it's going to be required that you at least try it out in your operations, because if you're not doing it, there's other people that are, and they're getting an advantage over you. And mining is a competitive game. So if say everyone in China now is putting on custom firmware, that's going to add a lot of hash rate to the network, increase difficulty level, and you're going to be worse off. So you want to make sure that you're at least following suit and that you're looking at this area.
Yeah. And you touched on a very, very good point that you don't want to just go and start implementing some firmware from some sketchy person on Telegram. You want a reputable firm, and you want to be confident that no one's taking advantage of your operations. How would you recommend a miner go about finding the right firmware to use to maximize their profitability?
I don't have a great answer for this because unfortunately the industry is not that developed. In my opinion, there's only one like reputable player in the space, which is Brains. Brains OS Plus, they have firmware for S9s. There's two common firmware players, ASIC here and Vinesh, and they've obviously built a reputation in the mining communities, and there are people who trust them. So I would experiment probably with there too, but I think you have to, do your own due diligence and factor in the risk reward of going with that. Um, it is definitely a concern anytime you're installing custom firmware, whether it's from ASIC or Vinesh or Brain. So just make sure you're weighing that in correctly. There are ways to audit like how much they're actually charging you, so you can see like how much of the day they're actually spent mining on their own pool versus yours. It should match up with that, say like 2% that they quote you, or if they do hash rate splitting, you should measure that too. But it's definitely a big consideration, and that's why not everyone does it, right? Is because it's not the easiest process.
Yeah. And you mentioned a very important thing, that if you do it, you want to make sure that you're performing that audit to make sure that that you're not getting taken advantage of. Going into some of your guys' other products, what you have an ASIC management software that you provide your clients?
That's still in progress. We used to run a 2.5 megawatt farm down in Kansas City, and this was like early 2018. And when we had to like either update a machine, reconfigure it, we had to do it all manually. So we're like, we should really build a program to do this. And at the time, there was really only like a couple options out there, like Hive, where they cost like $5 per rig per month. And to tack on another $5 for an S9 at that time, like made no sense. So we're like, hey, we should build this. But since then, there's been quite a few good products that have come out. So we've actually kind of put it on the back burner a bit. And the project we've been working on outside of like the mining pool and hash rate liquidation is a new mining data site called Hashrate Index. So we launched it about a month and a half ago. Basically, our view is that there's still a lot of room to grow for transparency in the space and education. So why not build a data website where we consolidate some of the key mining statistics, and can show that, and hopefully that allows like investors new to the industry to get more comfortable with it and start putting more money, especially in North America where we really want to see the industry grow.
Yeah. And going off of that, with where you think the industry is heading, talking to different miners in the past, many times you saw a lot of the mining being focused in some of these other countries, not being as focused on North America. And then more recently, we've seen a lot of players, a lot more investment happening in North America. Do you have any opinions on why you think that shift has been happening?
It's definitely hard to measure too. There's been a few studies out. I think Biduda came out with a report recently that said around 50% of hash rate is in China, and that was significantly lower than coin shares, which came out 6 months before that, which put it at 65. So it's really hard to pinpoint exactly if a shift is actually happening and how much hash rate is moving. But I would say there's like quite a few positive developments in North America, and you're hearing a lot of like positive press. Maybe it's the case that we have a press bias where we only hear like public mining companies that are all based in US and Canada, and we're not hearing about like the Bixians of the world, which are getting massive amounts of hash rate, but obviously not publishing it in CoinDesk. So it's really hard to say, I would say, overall. But I think the stage is being set for a movement of hash rate to the US specifically. There's superior energy infrastructure here, and we're starting to see that now in like places like Texas with unregulated energy markets, as well as people chasing like flared gas in like the Dakotas. We're seeing build out everywhere, Nebraska, like Georgia, upstate New York. So I think the energy infrastructure here is good, but it just was like it had a slow start compared to Szechuan province. And so I think we're going to start to see a lot of mining firms take advantage of that. The other thing really is like the professionalization of the industry. Historically, mining's been like an absolute mess where you put in money in, you have to put like a pre-order in with a manufacturer that you don't trust. You don't know if those machines are going to show up. You don't know how they price their machines. You don't know if there's warranty on them. Then you get the machines. You have to blindly trust the mining pool. You don't know if they're stealing from you. It was just a black box. And I think North American investors are typically very hesitant when it comes to that type of industry. Whereas Chinese investors are a little bit less risk adverse and they're willing to like kind of deal with that uncertainty. And so historically, I think China's been willing to put in more money, but now that the industry is becoming more professionalized, especially at the manufacturer level, I think we'll start to see more US based institutional investors getting in. We saw that with the announcement of like Horizon Kinetics coming in with Core Scientific. I think there's quite a few examples like that where you're starting to see people more comfortable with the space.
Yeah, and that's very true. I mean, this is a very capital intensive business, especially mining. There's a lot of risks. Many times people think just because there's hard assets that it's a type of investment where the risk is mitigated, but there definitely is, for many of the reasons you just mentioned, things that have to be considered when you're trying to build out a large scale mining operation. When you're looking at it from a regulatory perspective, do you think that regulatory risks are something that miners and investors are truly considering when they're deciding whether or not to start an operation? Or do you think that it's given more weight than it should be given in some of these decisions?
I think from an outsider's perspective, you look at it like a federal regulation perspective, but in reality, like most of the bad things that have happened in the past, say in Washington State or Quebec or Missoula, they've happened at very local levels. So having strong relationships with your local jurisdiction where you're actually setting up your mining operation, I think is way more important than having like a state level or a federal level connection. And so those connections, I think, are vital to the success of long-term mining. And Washington State is the perfect case study of this, where that was like the early crypto boom, right? And everybody rushed there. It was a bunch of like maniac crypto miners who like had no regard for local government and didn't put their best foot forward and ended up getting slapped by the regulators there. And now look at it, it's like not even in the top 10 states to do mining today. So I think that regulation is important at a localized level for sure.
Yeah, and going off of the regulation front, when you're looking at all these different miners who are deciding whether or not they should be going public or staying private, it's one of those things where there's a certain level of transparency with a public mining company, and a private mining company might not have to adhere to those standards of showing that, I guess, behind the curtain view of how their mining operations are operating. Moving forward, how do you think the landscape is going to look from these mining companies either deciding to go public or stay private as they scale up their operations?
I would split it between manufacturers and then mining farms. I think manufacturers are still they're still itching to go public. So obviously Kanata and eBang went. I think Bitmain and MicroBT will want to go public eventually because public markets are great financing tools for those types of manufacturers and historical industries, and they can get better valuation multiples than they would be able to in the private markets. But moving on to the second group, which is mining farms, I don't foresee any large mining farms going public in the near term because most of the mining farms that exist today, which are Hut 8, Bitfarms, Northern Data, Riot, Argo, DMG, I'm sure I'm missing a few others. They all went public like a couple of years ago when the market conditions were a lot better than they are today. Valuation multiples definitely in the Canadian exchanges are pretty bad right now. You can see that with Bitfarms. They run, I think, somewhere like 700, 800 petahash, and their market cap isn't what you'd expect it to be. So I definitely don't think it's, a great avenue for financing. And then you get into this area where now you block yourself off from a certain group of investors. Like if you're Hut 8, you can't go to the same investors you could go to if you're a private mining corporation. You need to now go to public investors like Fidelity Canada that bought their latest round. And so you're definitely limiting yourself, I guess, a bit by going public in today's market.
Yeah.
I'm kind of dancing around to your question here, and I don't have like a great answer for it, but I wouldn't go public if I was a mining farm. What do you think? Like,
Yeah.
do you think it's better for capital markets?
Yeah, I actually am of a similar view of what you just laid out, that from a hardware manufacturing point of view, I think that you're going to see a lot more of those companies wanting to go public. It's a great avenue to raise capital. On the valuation multiple that you brought up with some of these other publicly traded companies, and with the amount of miners that they're actually running versus the actual valuation on the market, it doesn't seem like the route of going and taking a mining company that's purely focused on buying miners and running those miners. It doesn't seem like it would make the most sense to take a company like that public. And so I'm of a similar view. And I think that another very important consideration that is really at the backbone of when you're trying to scale a mining company is how you're going to go about raising capital and who you're going to associate with, how you're going to find those funding partners. And that's something that is extremely important if you're trying to scale up and build those relationships, because it's still a very nascent industry. I was just talking with someone the other day, and we were talking about how there are certain times where a mining company, based on the pure fundamentals of what's on their balance sheet, how much they're generating in terms of cash flow, and all the fundamentals of raising capital, they would be able to access much more capital than you're seeing a lot of the mining companies today being able to access, just because it's such a nascent and new industry. So that's one of the reasons why I want to get your opinion as well, because it's always interesting to hear the perspective of someone else in the industry and how they view the capital and expansion phases of growing a mining company. And everyone has their own experience. I mean, you look at someone like Andrew from Hut 8, who was in investment banking for over 20 years and had great relationships, capitalized on the need for institutional investors to want to be able to get into Bitcoin, get exposure to Bitcoin, while also being able to trade in and out on a publicly traded company. He executed a reverse takeover of a company on the Canadian Stock Exchange, and he serviced that need. But I think the financing environment today is a little bit different, and things are always changing. And we definitely want to keep everyone listening up to date with our views on how that's going to progress.
Yeah, no, that was well put. And today's financing is starting to get more diverse. So not only can you do like debt or equity financing, now there's a lot more equipment financing becoming available. Historically, that's just been with collateralized Bitcoin, but there are some companies now that are doing stuff like collateralized ASIC. So I'm excited to see how companies can leverage all these different things, whether it's debt, equity, or collateral, equipment. I think there's a wide range of ways that you can get more capital. Another one is like hashrate forward contracts. Like it's very common for commodity producers to sell forward some of the commodity in which they're producing. So if we can start creating like offtake agreements for hashrate, that could be used as another funding mechanism for mining farms. So it's exciting developments, man.
Yeah, and actually on that particular topic, this is something that on the podcast I haven't gone into much detail yet, but you brought up the hash rate, the hash rate contracts, and how miners could utilize that for financing. Can you speak a little bit in more depth to how that mechanism functions and why it's beneficial for miners?
Yeah, so at its basis, a hash rate forward contract is executed by two parties, one being the seller of hash rate, which is the miner, and then one being a buyer. And usually that buyer wants like a discount on the value of hash rate. So say the value of hash rate right now is like 10 cents a terahash per day. They're going to buy up, 12 to 18 months of your hash rate for, let's say, like 8 cents or 9 cents. But what they're going to do is they're also going to provide you all that money in advance. So you get that large sum where you otherwise wouldn't have got it until, periodically throughout that 18 months, you would have got it right away. And then you can go and buy equipment to finance your operations. So it allows you as a miner to do two things. One, finance, and then two, also hedge your risk. You've locked in now the future value of your hash rate so that if, say, the hash rate goes down to 6 cents, now you're hedged because you've already sold it at 8. But it also means you're limited on the upside where if it goes to 12 here, you've sold it at 8. So I think that's a risk that miners, need to weigh, whether they want to hedge forward some of their hash rate. But I'm pretty bullish on those types of contracts generally. I think we've seen a few come out to market. They've been pretty great. I think we have a lot of room to grow though on these products. Right now, there's not a lot of buyer interest in hash rate forward contracts, which means that it ends up becoming a really expensive hedge. From my understanding, a lot of these products out there, you have to sell your hash rate forward at like 40 to 50% discount, over a 12-month period. And for me personally, I'd rather roll the dice and be like, I'll see what happens. That's too expensive of a hedge. So I think
Yeah.
as an industry, we need to work on getting more interest from outside of the mining circles into like traders and prop trading firms, high net worth individuals, and get them excited about hash rate as an asset class. And then we'll start to develop like really strong products for miners to both finance and hedge their operations.
Yeah. And on the hash rate forward contracts, what are some of the providers where a miner can go and begin? I I know that you and we probably wouldn't want to move forward with that just because we're very bullish on the future of this industry. But what are some of those options that a miner could go to if they're looking to get involved with that type of financing?
Yeah. Well, the very first example of this, and maybe this is controversial, but was cloud mining. So somebody like Genesis Mining, they are a miner themselves. They build mining farms, and mostly started in Northern Europe, and they sold forward their hash to retail. Now, I don't necessarily agree with how they did it and how most cloud mining companies do it, but that was at its basis like the most fundamental forward contract where they get paid up front for hash rate, they lock in a certain price, and now they can go buy, more GPUs to start mining Ethereum or whatever they were selling at the time. It's developed a bit more since then. So there's players like BitUda, which will help broker transactions between a mining farm and a buyer. So they made news a couple times this year, executing transactions for people like Greenwich in upstate New York, as well as Grid, and they allowed those miners to sell forward some of their hash rate, to a high net worth individual. So I think if you're sizable, you could go to them. There's still somewhat limited opportunities out there. So I would say like it's not an ideal situation where we're at now, but I think in the next 18 months, there's going to be significantly more products out there that will help miners with these types of problems, financing and hedging. So I'm I'm hopeful. It's we're not there yet.
Yeah. And we're really in an industry where we're looking at digital assets in a new way and how they might potentially disrupt the way that value creation and value transfer functions within society. I mean, mining aside, this is a type of technology that could disrupt many of the traditional areas of the financial sector that are dominant today. So, that said, how do you think that the future of finance will look given the evolutions that we're seeing within our particular industry?
To be honest, I have no idea how long that will take. I'm obviously in this industry, and I'm sure you are too, because we think it will be eventually the case where Bitcoin and crypto plays a large role in the future economy. So I'm definitely like bullish long term. I just don't know how long it'll take. I
Yeah.
suspect it'll take a while because the governments obviously don't want this to happen. Um, but in an era where there's no longer a centrally planned Fed. I think there's just going to be a more capitalistic system where money gets allocated properly versus, in today's world where we look at like COVID situation and what's going on with the Fed, the government's basically picking winners and losers. Like, who have the winners been in the past 8 months? It's been the Jeff Bezoses of the world, right? And the losers have been small businesses. So that's like a decision that the government's made over the past like 6 months in a world where our financial system is decentralized and money is allocated very different than special interest. I think that entire system will look drastically different. So I think it'll ultimately lead to a more fair and just system that I'm excited to, play a role in supporting over the next few years.
Yeah, and I definitely want to unpack that a little bit in the sense of how the government went and picked the winners and losers. So everyone's been reading news about how there's been an enormous amount of stimulus and then certain industries being bailed out, companies being bailed out. Can you unpack how the companies like Amazon or other big businesses might have been the winners, whereas the small businesses were the losers?
Yeah, and that's kind of a blanket statement. Obviously,
Yeah.
specific. There may be large corporates that were also losers, and there may be small businesses that were winners. But kind of that generalization. Obviously, it's like the most basic level. Anything to do with like bailing out large companies is an easy target, and probably the most simple to understand is that the government often bails out large corporates that have special interest groups in Washington and lobby to them. Whereas like a company like mine or yours, like I don't have a guy working in Washington trying to get us extra packages, so we are unfairly treated. And then in the idea of like the government printing unlimited money, it's like, where does that money actually flow to? And like for Amazon's example, like all of that money is basically flowing like gone straight to like large corporates like Amazon. So I think it's a mix of both like physical policy and monetary policy, and it's a very complex system that will benefit like those that have closer ties to the people that are making decisions. It's really impossible to get money out of politics. In places like Canada, there's no super PACs where anyone can at maximum donate 5K, and even then there is special interest in the government, whether it's for like a company that has a lot of jobs or a lot of votes to give to a political party. It's just really hard to separate state and business, and I think that's what Bitcoin helps solve, is that we can separate that special interest, and that there is no centrally planned government that's choosing winners and losers. So kind of answer on your question there a bit, but I think like
I think you touched on it in a great way, and this is one of the reasons why I wanted to dive down that, is because I think a great example. We take a step back and we look at how this stimulus or this approach got applied to one particular case, and we can look at the airlines, right? So I believe I it was American Airlines that received an enormous amount of of essentially like grant money for keeping operations open. They've put together a specialized contract where, as long as they kept a certain amount of the employees on payroll till a certain date in the future, then they would receive a certain amount of money. The airlines had been doing buybacks, which had inflated their stock price over many, many years. And then as soon as COVID hit and they were in trouble, any other company, like a small business or even any type of SMEs, would have to go and raise capital from the private markets. They would have to go and either raise capital through equity or debt to try and be able to cover their operations. And they would be working with much different terms than receiving an enormous amount of money in terms of grants, as well as receiving the type of equity financing options that the government offers. And so it's kind of crazy when you see that the government can go and offer these types of financing options to a really large company, whereas a smaller company that doesn't have those ties wouldn't be offered anywhere near the types of terms that American Airlines receive.
I feel the same way as you do. I mean, obviously, like the banks during the financial crisis was like the first like mainstream example of it, but we continue to see it. There's so much outrage over that, but like it's been 12 years since the financial crisis, and like this type of policy continues to happen. in various industries, whether it's airlines or some manufacturing or banks.
Yeah, and they took a play right out of the 2008 financial crisis playbook, and they ran it again in 2020. And I mean, it really puts into question how the U.S. dollar is going to perform in the long run. I mean, they basically did the ultimate short-term gain, sacrificing long-term potential with the U.S. dollar, whereas the Fed and the U.S. dollar, I don't think that you can necessarily look at that as the global reserve currency anymore. It's kind of crazy to believe that that's going to be the acting reserve currency if the Fed's willing to drop rates down to zero and print and expand the balance sheet by 75% in a single year.
Yeah, I think we'll see almost every asset appreciate to the US dollar, maybe except for other currencies, which the US government federal bank is not alone in this, right? The Japanese banks obviously been doing it for a while, the EU, Canada. So I'm not sure how the currency pairs will perform, but I definitely think this is setting the stage for a run for Bitcoin for sure, which the value prop of it being a scarce form of money and being a hedge to inflation is just going to continue to resonate with people who are looking for alternatives to holding their money in USD. So I think that story is going to really start to come out in the next like 6 to 12 months.
Yeah. And as that story continues to play out, we're both on the mining side, so we understand the fundamentals that are in part driving the baseline price floor for Bitcoin from a production standpoint. Do you have any predictions on where you think the price of Bitcoin will go within the next year? Not to put you on the spot here, but be interesting to hear your prediction.
I mean, every podcast needs it. So I actually, I'd push back on the cost of production a little bit. I don't love that metric because it's changing every second. So like from the time you said it to the time now, it's probably changed given transaction fees. So I like to look at it on a hash price basis, which is like $1 per terahash, and really measure like, okay, for every terahash you generate in hash rate, how much revenue can you get, and look at it from that angle. And I think from there you can start to derive more sophisticated views on like the mining economics. And so hash price, the value of hash rate, is something I look at very often. I'm like a modeling nerd, like at Goldman, like I love building models. So this sounds terrible, but in my like spare time, I'll build like prediction models for the value of hash rate moving forward. And so that's kind of the metric I look at. And on hash rate index, we also have a historical tracker of like the value of this over time. Looking forward, I think as we head into this economic uncertainty, I think we will see some Bitcoin appreciation. Maybe for the sake of this podcast, I think that we could hit like 20K by end of 2021, which probably is not that bold of a prediction. But what I think will be really
much higher ones.
What I think will be really interesting from a mining perspective is that we haven't been in a period where there's been a price run up without hash rate catching up really quickly in a long time. The last time was 2017. And so if we get into that type of environment again, where we see a large run up in price and Bitmain still has their drama going on, What's Miner is at full capacity, we're going to see a time where mining economics, make like 2 to 3x. They're going to 2 to 3x like their value per hash rate. So I'm excited for that to happen. I really want to see an era where miners are making more and where we can go into another run where you're no longer a commodity producer and commodity sell margins, where miners are making outsized returns. And I think we're on the edge of that. It's a mix between the perfect stage being set for Bitcoin price and also manufacturers like not getting their shit together. So I'm bullish on that.
Yeah. And on the manufacturer front, what are you seeing today in how they're in terms of the demand for that equipment and how they're able to satisfy their demand?
Yeah. It's changing every day. So there's obviously like the ongoing drama at Bitmain. That company is basically split in two. Jihan owns the chip relationship with TSMC, which he just got on the list for their new 5-nanometer chip, which is great for him. But he also doesn't own their manufacturing lines in Shenzhen that they've historically operated. So that's owned by the McCree side. So they're basically both having to go and rebuild the whole company, or fill in the missing parts and start filling orders. We've obviously seen a delay there They stated like 2 to 3 months delay on most of their machines, their new gen. Micro BT is pretty much all booked up. There's large corporates in the space that are basically buying up all the capacity for the next few months. So it's really hard to get your hands on new gen WhatsMiner or Bitmain machines. Kanon's obviously still like lagging a bit. They just released the 1166 yesterday, the Avalon. It's at like 42 joules per terahash. So, not terrible for Kanon, but I guess we'll wait to see like the CapEx spend. So I think there's this industry is rapidly changing, and like every day there's a new announcement from a manufacturer. But overall, sourcing equipment's harder than ever, I think, and that's really a barriers to entry. So mining operators that are experienced, like yourself, that are like have done this for a while, you're going to have an advantage over somebody that's new that wants to run in and start doing it right away, because you know how the manufacturers do business. You have that relationship built, and you just have better overall machine procurement, experience.
Yeah, and actually one of the reasons why I want to ask that question was because earlier today I kind of went down this rabbit hole with one of my contacts in the space, and we were talking about both Bitmain and and WhatsMiner as well, and the different options that were out there. And one of the things that he mentioned was what you actually just echoed in terms of availability and how difficult it is to procure equipment from certain companies today. So very interesting.
We're seeing almost like a cartel form, especially for like the deliveries in North America, where there's quite a few large mining firms, and they've made news quite a few times in the past few months. And if you're not one of those companies, it's really hard to get in the queue for those new machines. You either have to play ball with them, host through them or finance with them, or you can't get like large quantities of new gen machines, at least not for the foreseeable future.
Yeah, and I guess moving on to non-crypto part of the podcast, I always like to ask my guests what their favorite book is.
Favorite book is probably like Made in America, about Sam Walton and the founding of Walmart. I've always kind of been interested. It's really a startup book because it's like his first 15 years building Walmart. Just like little things like going into every meeting with intellectual curiosity and writing down everything. He'd basically go into his competitor's office and be like, how do you like source like different like products, or like how did you expand your team, or how do you hire? And generally his competitors were really open with him. They just tell him like, hey, this is how we did it, these are the lessons we learned, and he'd go in with like a notepad and write it all down. And I think that can teach you a lot of lessons on how to do business, but also how to treat life. Like treat it as a student, learn as much as you can, and usually people are willing to help you if you show them some respect.
Yeah, that's fascinating. So he would just go into his competitors' offices, just walk up, they knew who he was, and he would just ask them exactly what it is that they're doing.
Yeah, they give him all the secret sauce. He'd be like, hey, I'm operating a similar store to you in like 2-3 towns over. Like I'm having troubles with XYZ. Like, have you ever gone through something like that? And they tell him, and he'd figure it out.
Wow, that's fascinating. And because I'm thinking about it now, that's kind of the ethos uh, that we see a lot within the crypto space, because we're all building to help create a more, I guess, digital, decentralized future, and creating an entire new way that we can approach these different types of problems in industries by applying blockchain. And so, even though I'm a miner, I'll talk with people who are building something in DeFi or building some other blockchain protocol that is completely different than what I'm necessarily doing and has a different business model, but we'll try and share what it is that we're seeing that's successful. And then I think that even with those conversations, we take a similar type of approach on the mining side too. I've been conversations that I have with other mining firms or other mining executives. I kind of tell them what it is that we're working on. Some of them have known about the podcast prior to us launching publicly, but it's just something where I think everyone's kind of in it together to try and build a better future for this industry. It's fascinating.
Yeah, I mean, we all love Bitcoin. We want to see it succeed. So I love that camaraderie. And then also, like you as a young entrepreneur and CEO in the space, like life's long. It's easy to get sucked into like a view that I'm only looking 1 year out or 2 years out. But like considering how like young you and I are running companies, like who knows what the space is going to look like in 10 years. So if you can build strong relationships now, that are based on like, strong personal relationships, that will never be a bad thing. And so helping out each other where possible, I think, is like vital to building long-term business success.
Yeah, and I completely agree with that. I mean, I think it's so important to recognize kind of where we are in the cycle of everything, and how this isn't a 1, 2, 5, 10 year play. This is really a multi-decade play that's going to be happening here. And then aside from that, I mean, thinking even more grand, I mean, how are the things that we're building and how society is progressing, how is that going to look and affect the future 100, 200, 300 years in the future? It's just kind of hard because you have a very concentrated number of data points. So you're definitely not working with perfect data when you're trying to make those long-term predictions.
Yeah, you're looking at the next like difficulty epoch coming up in 6 days. But even if you look at the mining market like 3 years ago, like it was completely different. I have predictions of where mining will, or what mining will look like in 2023 or 2024, but I could be completely wrong. I'll most likely be wrong because I wouldn't have been able to predict where we are today.
Yeah.
So I think like it's just best to like build with integrity and work with people as much as possible.
Yeah. I mean, I think if anyone in the world gave a price prediction of where Bitcoin is today, 10 years ago, people actually would look at that person like they were insane. Like probably would
Yeah.
not speak to that person seriously about investments or price movement or anything for any asset. Because I mean, what was Bitcoin 10 years ago? In 2010, I don't.
Less than $100 probably. I don't know.
Yeah.
I wish I was in that early.
Yeah, I mean, you're doing pretty well if you're in that early. I mean, even in any part of the industry, and I think that all companies in the industry, if you're building or you're involved, you're going to really benefit a lot from all the massive growth that's happening in other parts of the industry. More capital flowing in, more things being built, better resources for miners, which is, I mean, one of the things that your company is really working on and moving forward. I think that all the companies really going to benefit from this and help each other grow.
Yeah, no, I definitely think so. We're moving in good space, so we just got to keep it up.
Yeah. Actually, one thing I do want to ask is, so previously you have experience at Goldman Sachs, and you had the opportunity to be in that work environment for a certain period of time, and now you're in uh, the crypto blockchain world. Why did you decide to make that switch and go into the stuff that you're doing now and leave the traditional investment banking sector?
Really twofold. One, I was falling deeper and deeper in love with mining. Crypto mining was just so fascinating for me. I think there's some huge industry trends here that are going on that I really wanted to be a part of and capitalize on. Specifically, like sophistication of mining and people actually wanting mining-based like derivatives and financial instruments. And then second, the movement of hashrate to North America. So like those two, I think were key like tailwinds that I wanted to capture. And then the second was like I was working as like, lower down in the bank. The bank's very hierarchical. Um, I'm so much happier now, and I think I'm learning a lot more in a more unstructured environment where I don't have a direct like boss that's giving me marching orders every morning. Like a lot of my work is like self-driven, and I get to go decide like, okay, what should I work on today? And that's not like for everyone. Some people want a more structured environment where they can learn from mentors and learn from their experience. But for me at the time, I really wanted to just go out there, build some things, break some things, and learn from it.
Yeah, that's awesome. Because I mean, the investment banking world, I mean, that's a very, very structured approach. Extremely, a lot of modeling, especially in the earlier days when you're lower down on the rung. And I mean, going as an entrepreneur is the flip where it's really you driving whatever you want to spend time on, what you want to work on, and what you think is going to build the firm as quickly as possible and in the best way possible.
Yeah, exactly. I mean, I'm happy I got my time at Goldman. You learn a lot while you're there, but I would say like overall, I'm just extremely excited about what Luxor's building, working in this industry. I'd never get sick of it. I spend like 90% of my working hours a week just like only focused on mining, um, which is a considerable amount of hours right now. And I never get tired of it. I love every aspect of it. So I'm looking forward to continuing to like build product here. I think that's the coolest part too of like startups is just building product and shipping it and getting customer feedback. Nothing's better than like building a real product that people use. That's like the biggest joy in my life right now.
Yeah, that's awesome. Well, you're doing an incredible job. This has been an awesome conversation. It's been really a lot of fun to talk through a lot of these concepts. I mean, you're deep in this mining space. You understand more than most people out there in mining. So I think that this was really informative for everyone listening. Before we wrap up, are there any places online that you spend a lot of your time, or where anyone who's listening can connect with you or the company?
Yeah, you can message me on Twitter, Ethan_Vera, or on Telegram, just Ethan Vera. And then if you have a chance, definitely check out hashrateindex.com. We basically built this mining data site so that we could add more transparency. All the visualizations are free, so go around, play around with the data. If there's anything you want to see, just like feel free to ping me and we'll build it. We just want to build cool things that miners want. So yeah, hit me up on Twitter or Telegram and we'll continue the conversation there.
Awesome. It's been great.
Thanks for having me on. Yeah, this has been awesome.
Thanks for coming. Thank you for listening to this episode of the Sazmining Podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.